Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Thursday, December 4th, 2008. Yesterday around 3 p.m. Eastern, the Reserve Bank of New Zealand cut its interest rate by 150 basis points, bringing the benchmark rate down to 5% from 6.5%. The central bank has now lowered rates by 3.25% since July. In their statement, the bank said this puts monetary policy to an expansionary position. With inflation risks now pointing to the downside, the bank also felt it was appropriate to deliver such a big reduction in order to support the economy. The New Zealand dollar-US dollar pair advanced, as investors speculated that central bank cuts, two of which we'll get to next, may help bolster global economic growth, helping to boost demand for high yielders such as the Kiwi. The pair has been trading sideways the two sessions before today, forming support at the 0.5250 level. Today, the pair rose to test 0.5390 before falling back in the New York afternoon session. The Bank of England cut rates by 100 basis points, bringing its base UK rate to 2% from 3%. That move met expectations and is now the lowest level since 1951. The statement said policymakers see inflation continuing to ease. Lower commodity costs and weaker domestic demand outweigh any upside risks to inflation from a reduction in the interest rate and a depreciation of the pound. With growth deteriorating sharply, the Bank of England has been slashing rates aggressively in an attempt to filter down the lower borrowing costs to consumers and potential home buyers. The European Central Bank, meanwhile, lowered rates by 75 basis points, bringing its key rate down to 2.5%. That move was a slightly larger reduction than was expected by economists. It is also the biggest cut in the 10-year history of the ECB. The bank has so far been taking a gradual approach to lowering rates, and this bigger than expected cut is indicative that policymakers are responding to weak data for manufacturing and services. Those sectors contracted at the fastest pace on record in November, while economic confidence hit a 15-year low. The euro-pound pair hit a new record high near 0.8690 prior to the two central bank decisions, fell back down in the wake of the announcements, and then rose again to retest its highs. The Bank of England seems determined to act more aggressively than the ECB, which favors the euro as its benchmark rate is now higher than the pound's. The euro experienced strength against the dollar as well, climbing 280 pips from its low near 1.2550. Currency traders had priced in the 75-point rate cut and were relieved that there wasn't a bigger move. They may be selling the dollar also prior to tomorrow's non-farm payroll report, but most see a Eurozone economy that may be in a better position during the next couple of months than the US one. The pound fell sharply overnight to the dollar, dropping from 1.4750 to support at 1.4470, a change of 280 pips. After the Bank of England decision, however, the pair managed to wipe away its losses as fears of an even bigger cut did not materialize. The pair is now forming a downward channel this week, while the overnight low for the pair was a fresh 6.5-year low. Turning to the U.S., weekly jobless claims fell by 20,000 for the week ending November 29th, surprising forecasts on the downside. Still, anything above 500,000 is consistent with sharp monthly job losses. Also, 4.08 million Americans are collecting continuing claims, more people than at any time in the last 26 years. It's a sign of the worsening labor market, as workers being laid off are finding it hard to obtain new jobs. U.S. factory orders plunged 5.1% in October, the steepest decline in 8 years. Demand for manufacturing goods continues to weaken as consumers shop less and watch their budgets as the economy situation deteriorates. Retailers and wholesalers are therefore putting in fewer orders to fill inventory, which is showing up at the factory orders level. The dollar-yen pair fell overnight, setting a low near 92.40, continuing a downward sloping channel. Stocks in the U.S. were trading lower following the weaker fundamental U.S. data. In the afternoon, the yen continued gaining and set a new weekly low before 92.40. We saw earlier how the dollar was pressured against the euro and gave up its overnight gains against the pound. Against the Canadian dollar, the greenback saw a strong move upward, especially in afternoon New York trading. From a low near 1.2510, the greenback surged 250 pips, breaking out of its recent upward channel, hitting 1.2780. The Canadian dollar was pressured by weak oil, which fell below $44 a barrel, and the suspension of the Canadian Parliament until January 26th in order to forestall a no-confidence vote that Prime Minister Stephen Harper was sure to lose. The instability in government weighed on the nation's currency. Tonight, Australia releases its construction PMI, and overnight, Germany will post its factory orders. Tomorrow morning, Canada will post its employment change and unemployment rate. Then comes the main event, the U.S. non-farm payroll release, which is expected to show a fall of 320,000. Also, the U.S. will be releasing its unemployment rate. And that's it for today's broadcast. Thank you for watching us here at CMSFX.com, and join us tomorrow as we wrap up the week. Take care and happy trading.